Hi, I'm Dave Monty. Welcome to my video series, Everything Villages. Today, I am going to do a real estate market update for the Villages. It is September 2025, so stay tuned. As always, before we get started, a few housekeeping items. If you like this video, please hit like. If you like my channel, please subscribe to it. Both those actions help these videos reach more people, and I greatly appreciate it. Also, if you like a copy of my free 42-page guide, Buying and Selling a Home in the Villages, or my nifty cost of living calculator, you can email me right here at davemontysales@gmail.com, and I'll send you out your copy. Also, I have plenty of other videos on my channel, Biggest Bang for Your Buck, where we talk about the best value in the Villages is buying a home that needs to be updated. Allow my team to update it for you before you even move in, and those combined costs of buying the home and the updating costs are often a lot less than buying a home that's already updated. I did mention earlier that I have a cost of living calculator. There's several tutorials online on how to use that. Understanding the two different markets between the MLS, where I work off of, and the Villages VLS. Pricing videos, location comparisons, homeowners insurance bond. I try to cover most of the topics that would be of interest to either the buyer or the seller in the Villages real estate market. This is what we're going to be covering today. There's still a record number of new home sales happening month over month. Eastport is starting to take shape, and you can see it, so people are getting excited about it. But at record numbers, people are moving down there and kind of disillusioned because, yes, there's Eastport, but there's still no grocery stores or medical or pretty much any errand that you need to run. You're hopping in your car and moving. So at a higher percentage than normal, people are moving in and then turning around and selling their homes down there. As I mentioned in the previous video, homes that need updating stay on the market much longer. Therefore, the prices tend to come down more. Unfortunately, most of the homes on the resale market need updating. Most people buy their homes here and do very little to them. Homes that are updated and are priced fairly are still flying off the market. What's inflating the inventory are the homes that need some help. Inventories are leveling off right now, if not coming down. Now, that's not because we're selling more homes. It's because sellers are opting not to put their home on the market in the current conditions. They believe they can get much more for their home because they're kind of looking at COVID pricing. And when you come in and do the market analysis and show them the reality, a lot of people, like I said, are waiting for market conditions to improve. Sellers are still asking way too much for their homes. We're almost to the point where, on average, people are listing their homes 10% too high, which is huge. And then deals are becoming more contentious, meaning it's getting harder and harder to get the buyers and sellers to meet at an agreed upon purchase price. And often we get to the point where we're $5,000 apart and neither the seller or the buyer want to budge. Now, that's happening not just here, but it's also happening nationwide. Home sellers are pricing too high and not listening to the market. Right there in the Forbes magazine, it says you're playing Russian roulette if you price your house too high. And I've experienced that over the last 6 months. Prices were holding here at the lower level than they were during COVID. But over the last 3 or 4 months, the pricing has started to come down. And the people that had their homes priced too high 6 months ago realize, hey, it's priced too high, so they start to come down. But as the market goes down, they're kind of chasing it down and never getting to the fair market value for their home. So they sit on the market longer. And I got a slide that will show that. I'm not seeing this in the Villages as much. Canceled home sales are surging as fed up buyers and sellers walk away. What I am seeing is what I mentioned before, is that buyers or sellers are walking away because they can't agree on a price. The seller is saying, I've already lowered my price. I believe it's a fair price for the house, and buyers are trying to lowball pricing, and we get within $5,000 of neither buyer or seller are budging. So that is happening a lot right now. So if you've seen any of my videos, you know what months of inventory is. It's basically taking the current level of inventory, dividing it by how fast homes are selling, and it tells you how many months it would take to deplete the current inventory at the current run rate. What I was taught is that a 6 months of inventory is a balanced market. Anything over 6 months, it is a buyer's market. Anything less than 6 months, it's a seller's market. Well, experience has taught me that it's actually closer to 3 months, should be more of a balanced market. Anything over 3 months tips the pendulum towards the buyer. The buyer has a little bit more control. The fact that we're not too far over that 3 months, that 3 to 4 months, yes, it is a buyer's market, but it is not a lowball buyer's market. The sellers are not desperate here in the villages. They pricing their homes too high, and you'll see that we are continuing to do price decreases. Active listings. As you can see, as we came out of COVID here, just the listings continued to march and increase. Now, this drop this year in active listings, I think, has more to do with a lot of sellers just not wanting to jump in this market. They know the interest rates are a little high right now. They know homes are taking longer to sell. You do a market analysis for them and show them what their home is worth. A lot of sellers have either one of two reactions. One of them is, nope, let's just price it at the higher value and we'll see what happens. And then other ones are just saying, I'm not going to list my home in this current market. So you're seeing fewer sellers putting their home on the market with the current conditions. All right, so here are the number of new listings over time. This graph is a little bit hard to read, mainly because there's definitely seasonality in listings. As to, you usually get a lot more listings at the beginning of the year during busy season, and then it tapers off. What's kind of interesting here is you can see that the low point's always November. There's November, November, and what you're seeing is we're not to November yet. So I anticipate this graph to come down. When you go on a listing appointment, you have the discussion with price and you kind of show them what the market conditions are. A lot of the sellers are just saying, I'm going to wait out. I'm not going to put my house on the market with the current conditions. So now the number of sales has been, slowly increasing from, kind of here's COVID over here, came down to the overcorrection of COVID, and you are starting to see number of new sales go up. Now, the number of new sales is going up also because pricing is getting more in line with buyer expectations. So months of inventory, which we've already discussed, but I also want to just show you the trending. No months of inventory down here during COVID. And then right after COVID, it kind of spiked up. The months of inventory came down, and the months of inventory continues to increase over time here. Now, over the last year or so, they have come down slightly. Again, I think that's because more sellers are sitting out of the market rather than the pendulum turning back towards the sellers. Days to sell continue to increase. You can see that during COVID, homes were selling in 10 days on average, which was crazy. And then we come out of COVID, and you can just see that the days to sell continue to increase. Even though the inventories are coming down, the inventory that's currently on the market looks a little tired. The homes need updating. So a lot of my buyers right now are just waiting for that really nice home to come on the market at a really fair price, and you're almost in COVID level competition for those nicer homes, the homes that have been updated on the resale market. This is the most important. Everyone wants to know where our price is going. And you can see that we came out of COVID. We kind of dipped down. And since then, it kind of leveled off for a while. Level, slightly going down. And then this year just started to go down. During here when the sellers were holding their line, the inventories increased. As soon as they stopped holding the line, we started to see the inventories decrease, again, because prices started to come down to more realistic pricing, as well as fewer homes on the market. Now, what's interesting about this curve is if I go pre-COVID and show you how pricing was appreciating over time, and I take that same slope of how fast they were appreciating, I take out COVID, and we're almost right on that line. Now, when you're trading stock, this is called a support line, and it almost looks exactly like it would in the stock market. But all of a sudden, it almost looks like it hit the support line and is bouncing back off. So maybe pricing will go up, but I don't see anything in the near-term future which is going to really stimulate the market here to allow prices to continue to increase. All right. Just a little bit of a closer look. I just zoomed in a little bit so you could see, the effect. And this is what we talked about. Hold. Inventories increased because buyers were expecting prices to come down. At the beginning of this year, you really started to see the pricing come down here in the villages. And again, same exact graph as before, just a little bit different scale so you can see it better. This graph shows the original asking price to the actual selling price of the home. In the villages, it's always average around 97 to 98%. During COVID, it shot up and people were almost always getting asking price for their home because it was a little bit of a feeding frenzy here. We started coming out of COVID. What's happened over time, as you can see, this continues to decrease. And there's some fluctuations in here, but we see this number decreasing, meaning that the sellers are asking almost 8 to 9% too much for their homes. They sit on the market longer, they reduce the price, and they reduce it up close to 10%. Other factors that are affecting the market, and I'm hearing this on the resale market quite a bit. Seeing more and more people buy new homes. Again, at a higher pace, they are sort of regretting where they bought. Not everyone, obviously not everyone. People, a lot of people do like it down there, but a lot of people, I hear it all the time. I'm sick of being in my car all day long to go grocery shopping or to go pick something up because there are no conveniences down in that area yet. There are definitely a lot of amenities, including Eastport, but if you need groceries, you're hopping in your car. You're not going, while the entire villages is connected via golf cart, it's not practical down there to use your golf cart to go run errands. You don't want to be in your golf cart for 45 minutes to get anywhere. Waiting for interest rates to come down. I've been hearing this quite a bit over the last couple of months, even more. Uncertainty, I should put uncertainty about government-funded programs. So we are seeing that quite a bit. People just nervous and not 100% sure what's going to be happening over the next couple of years here and just afraid to pull the trigger. And people now are starting to get a little bit more nervous about inflation. These are all things that I'm hearing from my buyers right now. All right. We talked about this disconnect a little bit. Sellers, the poor sellers. Sellers really think right now that we should still be at COVID pricing up here. And they continue to want to put higher and higher prices. Now, this is tilted over time, but this is to illustrate the disconnect. So the sellers put their home on the market, and then they lower the price to come down to reality, but the buyers think it's this. So again, I got a lot of buyers lowballing still and a lot of sellers holding on. Now, what's interesting, like I said, is a lot of these deals are getting within $5,000-$6,000 of one another, and they stall out because the seller's just like, I'm sick of lowering my price, and the buyers are saying, no, it's a buyer's market. I should see lowball pricing. So it's still a little bit of a disconnect, but that gap is narrowing. We used to be at $20,000. Now we're at about $5,000. Again, anecdotally, not any real numbers to back that up. I don't know if I've had this on my presentations in the past because I put together a presentation about a month and a half ago and just ran out of time to be able to video it. This is just a snapshot that I get on my multiple listing service MLS dashboard. And, number of new listings over the last 10 days. But what's interesting here, the number of price decreases over the 10 days. In each 7 to 10 day period, we're seeing almost 25% of the entire inventory have price decreases. So pricing too high, decrease. So we continue to see a lot of price decreases to match the reality of this particular market. The other thing that you kind of see in here too is that's a high number of expireds, withdrawns, and canceled. Almost 8% is not actually selling. You still have a lot of homes that go pending, but a lot of homes are getting to the end of the listing without selling. Usually that's a 3 to 6 month period. All right. Market analysis. Now, I'm pointing this out a little bit for sellers, a little bit for buyers, but mainly for the people who are looking to sell in this particular market. A market analysis is a lagging indicator. You're looking at what homes are currently on the market for. They haven't sold yet. Okay? You're looking at homes that just went pending and homes that sold in the last 3 to 6 months. So when I'm doing a market analysis, I'm actually doing a market analysis that's probably on average about 3 months old. In a flat market, it's very easy to pick a listing price after you do a market analysis. So let's just take a quick look. I do a market analysis in an up market. Now this is pricing and you can see that it's increasing. Again, for illustrative purposes, this is an exaggerated slope. Okay, but if I'm doing a listing today or go to list the home today, and I'm looking back up to 3 months for selling data, on average, I'm looking at pricing that was a month and a half old. When you do a market analysis, you come up with a range of pricing. So if I take that range where I did my market analysis right here, here's the high end of the range, low end of the range. In an up market, I will take an average home a lot of times and market a little above average on an average home, right? Because I know the pricing has increased over time. Right? So if you price it too high to begin with, eventually the market will sort of catch up to that higher price. Now the opposite happens in a down market where we are today. Okay? There's my slope of pricing going down, again, exaggerated. Here's my list date, and I'm looking back 3 months at sold data. So on average, I'm about a month and a half old. By the time I do my market analysis, I'm almost out of range. So I take this average pricing and I say, okay, I'm going to list it at the average. Well, it's almost too late in a down market. So what we've been doing, and the strategy that has been working, is that the homes that kind of are really, really nice, we're listing it at the average price now. So what we've done is we just kind of shifted it down, where if it's a really, really nice home, we are now going to be pricing in this area. So we're a little bit closer to fair market value. What will end up happening in this market, and this has happened quite a bit over the last 6 months, is you start off too high, and then we really did have a dip over this last year. So, all right, I know I'm too high, let's lower the price. Well, I'm still too high. Let's lower the price. I'm still too high. Let's lower the price. I'm still too high. The strategy now is, when I do my market analysis, is to actually bring it down closer to reality, so I'm near fair market value, so it sells. Okay, so if it's not selling and I reduce, I'm still along the fair market value rather than always chasing it down. So getting that pricing correct for a listing or for a seller is crucial, especially in a down market where you're just always going to be chasing it down, and you probably end up getting a lot less for your home over time than you would have if you've actually priced it correctly at the beginning. Again, record number of new home sales. But at a record percentage, a lot of people are turning around, selling their homes, and moving out of the villages, which has a compounding effect. You steal that buyer from the resale market and sell them a new home, and then they turn around and sell their home and dump another house onto the resale market. So you almost got a compounding effect there. Homes that need updating stay in the market much longer. Often those are good values for a buyer because we help people update their homes. Inventories are leveling off, mainly because a lot more sellers are sitting out of the market. Sellers are still asking too much for their homes, and the deals are getting kind of contentious. It's kind of interesting to watch. You get closer and closer and closer, and then seller and buyer dig in their heels over $5,000. I'm going to tell you, the ones who regret it the most, it's going to be the sellers, because now you got to go find another buyer. It sits on the market longer. The pricing comes down, but sometimes it's getting that seller over that emotional negotiation in this particular market. As always, if you'd like a copy of my free 42-page guide, Buying and Selling a Home in the Villages, or a copy of my nifty cost of living calculator, you can email me right here at davemontysales@gmail.com. Again, I hope you found this video informative. I never ask you to find it entertaining because they're numbers, and maybe I'm the only geek who really likes numbers out there. Again, I hope to see you around the villages. Take care.